Hey guys, hope you're all doing really well. Look, I just wanted to run through look at a trade that just happened. I've been out for dinner, so I missed trading the London session, but it looked like it was absolutely perfect. I'm going to run through that example. It still hasn't hit the take profit area yet. It would have hit half the position, but it hasn't still yet to hit the full position. So I'll run through that example, but before I do that, like every video that I have done so far, I just want to run through the ICC strategy for those that are new. So if you are familiar with this strategy, please feel free to skip this section, and then we can run through the example after I've just run through the ICC strategy. So first, what does ICC stand for? ICC is it stands for indication, correction, and continuation. It's a trend-based strategy. So that means that the market needs to either be in an uptrend or a downtrend. So when we're looking at market structure, we're looking to mark up our charts using the ICC strategy, we want to mark up our charts on the 4-hour time frame and the 1-hour time frame. And that's really, really important that we do that. So we're looking for these key characteristics on this higher time frame. So let's get straight into it. So an uptrend. An uptrend starts with a low in the market, a high, creating a higher low because it's higher than its previous low. Price then creates a higher high. So once we get this formation of the low, high, higher low, and a higher high, we get our first phase, which is the indication phase. Now, right at this point in time, we draw our level of interest at the high right here. So we've got our indication phase. Now, the second phase that plays out is the correction phase. So price comes back below our level of interest, coming back below this high. It creates another higher low, so it's higher than the previous low. So that's the second phase. Then the third phase, what we do now is after the correction phase, once the correction phase is complete, we scale down to the 15-minute and the 5-minute time frames to find the characteristics that support the overall trend. So we're looking on the smaller time frames for the exact same thing or very similar characteristics representing an uptrend. And we know that an uptrend is consistent of higher highs and higher lows. So we're looking for that on the smaller time frame. Then when price gets above our level of interest, so above this high, we're looking to take entries. Now, what I like to do is I would take an entry here. My ultimate target is at this higher high level, but I also take partials at the halfway point. So the halfway between your entry and that ultimate higher high. That's my preference, and that's what I like to do. So that's an uptrend, and that's explaining an uptrend using the ICC strategy. And the reverse of that is a downtrend, so when the market is moving down. So very similar to an uptrend, except just the complete reverse. So we start with a high, a low. Price then creates a lower high because it's lower than the previous high, to then create our first phase, creating a lower low. And this is also our indication phase, very similar to the uptrend, but just the other way around. So price breaks down below this level. We can draw our level of interest on the previous low here. First phase complete. Second phase now, when price comes back up, which is the correction phase, the second phase, price shouldn't be breaking above the previous lower high. So it's creating yet again another lower high. And at this point in time, we're doing the same thing as we did for the uptrend. We once the correction phase is complete, so the second phase here, we scale down to the 15-minute and the 5-minute time frames, to find the overall characteristics that support the trend. And we're looking for downtrend characteristics. So we're scaling to the 5-minute, 15-minute, looking for those downtrend characteristics, which is lower lows and lower highs. So once price then gets back below this level of interest, we've then got the continuation phase. I didn't actually mention that in the third part. So it's the continuation phase, which is the third and final phase. Continuation. So price continues back below or around our lower low area. Very similar with the uptrend. the overall target is going to be the lower low. But for me, preferably, I like to take my profits halfway at the halfway point and also at the lower low. So I've got half my position here and half my position there. Once price hits both of those areas, that means I'm out of the trade. So with that in mind, let's run through what only happened not very long ago because I was out to dinner. So as I said at the very beginning, so this is the gold market, and this is currently the 1 hour time frame. What I like to do is I like to identify what sort of trend we are in. Are we in an uptrend or are we in a downtrend? And just from looking at this and then having an understanding based on that drawing that I just went through, we can very clearly see that we are in a downtrend. So even if you want to do this just to get familiar with it, you can mark out your charts. There's this path tool, right? It's found just on the left-hand side. It's 1, 2, 3, 4, 5 in, and it's down here. So you can use this to sort of help if you're not really sure. And what I like to do, I just do this automatically now. I don't have to draw anything, but if you're new, you can do this. You can draw the very most recent high. Price then creates a low. Price creates a lower high, creating a lower low, creating a lower high, creating a lower low, creating a lower high, creating a lower low. So we know that we are in a downtrend. So you could have drawn so let's just look at the most recent price structure because that's what we want to do when we're looking at the charts. We don't want to go back further and confuse ourselves. We only want to look at the most recent structure. So we can see that the most recent lower low here is the most recent lower low is here. But prior to that, and prior to the London session, which is the session that I particularly like to trade, we can see that there was an opportunity here. And I'll show you exactly what I mean. So we can see there's a low, there's a lower high, and a lower low, which is the exact thing that is played out in our drawings. We've created there was a high, there was a low, there was a lower high, there was a lower low. We've created an indication, and I drew my level of interest. So if we look back here, we can see there's a high, there's a low, there's a lower high, and there's a lower low. Perfect. I know now, based on that, I can draw my level of interest, and I draw my level of interest in the body of the candle. That's my personal preference. So I know that if price gets below this level and creates lower lows and lower highs, then I can look to take an entry, and my target is going to be ultimately around this area here. That is going to be my ultimate target. Okay, so at 3 a.m., which is the London Open, where the volume is really, it's the second highest volume compared to the New York session. That's when I look to take trades because that's when I know people are going to be buying and selling aggressively. So if we go down to a 5-minute time frame, I believe it looked best. We can see here very, very clearly, that based on what we drew on our higher time frame, on the 1 hour time frame, we can see that this is that indication. This is that indication that was created. Price then came back and corrected. It came above our level of interest. Price then was stagnant here for a little while. It didn't really break above this level here, did it? Not cleanly. So that's a sign. We can see now, if we look here on the minute market structure, we can see that's a high in the market. This is a minute low. This is a lower high. This is a lower low. This is a lower high. Price then is breaking down below this level. Just like we said, we want to capture, or we want to, once the correction phase is complete, so the correction phase is this, price is corrected. So now we scale down to that 5-minute and the 15-minute time frame. In this instance, we're looking at the 5-minute. I'll try and make this color just a bit lighter maybe. I don't know if that's any better. Let's see if that works. Okay, I think that's a bit better. So we've Indication phase. We've got now the correction phase. I've scaled down up because we know that after the correction phase, we're looking for characteristics of a downtrend on the smaller time frame. Exactly what we're looking for now. So I can see here, after the correction phase, price, there's a high here, there's a low, there's a lower high, there's a lower low. These are characteristics of a downtrend that we want to see because we know that on the higher time frames, we are more bearish, meaning we're more probable that price is going to go down based on the higher time frame. So what I would have done in this instance is, I'll just remove this so that was very clearly we could see that we're in a downtrend. I would have at around this point in time here, I would have got my entry and I would have put my stops at the most recent, this level here. And I would have looked to target this level here. So we still technically haven't hit the trade. Now, another thing as well, guys, you want to be hitting risk to rewards of generally 2-to-1 or a 3-to-1. This one is just shy of 2, so it's not ideal, but it's not terrible either. And this is something that you can monitor. Like if you wanted to reduce your risk a little bit, you could probably move it to the next lower high. Then we're in the realm of a 3-to-1 or a 2-to-1. So that might be the best move in that instance. But we can see, look, unfortunately, I was out to dinner and this was actually like a almost a picture perfect trade. It still, has potential to come back up here and potentially stop us out. But if that's the case, then we were wrong and that's perfectly fine. Price very well could come back and stop us out. Now, I'm very conservative in the way that I trade. So I probably wouldn't let this trade become a loser. I'd probably move my stops to break even if it aggressively came back up to this level. Now that does sort of does mess with your your statistics. You should really let trades play out. So because it very well could do this, it very well could come back up here, just tag this area and then come back all the way down. So if I then move my stop to break even, I've missed out on a perfectly good trade. So I'm personally trying to actually avoid moving my stops. And if my targets get hit, they get hit. I've just got to take it and run. But in this instance, guys, this would have been a really, really good opportunity to get in for a short here. So for those that do trade the London session, I hope that you did get into this trade. And I'm really hoping that these videos are helping, especially for the people that are new, or perhaps that are people that are really familiar with ICC and just want to see someone explaining it differently. I hope I'm not really making any sort of spin differently to how Sai teaches. I don't think the concepts are really simple. It's just explained from I'm just a different person. That's all it is. So I really do hope these videos are helping. But if you did have any questions, feel free to make a comment, and I'll do my best to respond to you. And if enough people are commenting the same thing, and maybe you would like a video on something in particular, I'd be more than happy to try and put that together for you guys so that it does help you. But that's all I pretty much have for today. If you did like the video, guys, please do give it a thumbs up. That would really help a lot. I really enjoy making these videos, so it's very encouraging to see people liking it and commenting. It makes me want to do more videos, so I'm glad it is helping. It is also helping me, journey, with the journey of this trade. I want to make myself more accountable and do more videos like this, not only to help you guys, but also to help me, because teaching this also reinforces what I already know. And it helps me become a lot more accountable for my trades. So but thank you so much again, guys. And if you want to see more content like this, please hit the subscribe button. But I'll leave it there, and I hope you have a great weekend. I'll probably make another one on the weekend. So if you guys have any suggestions, or if you want any tips or tricks or something, anything in particular, do let me know. But thanks so much, guys. Have a great one. I'll see you in the next one.